In today's episode, we are going to be going over how to transfer your property taxes in California. We're going to talk about Prop 19. We're going to talk about transferring your property taxes if you're over the age of 55. We're also going to be talking about how to transfer them if you're disabled. So if you got to lower property taxes, how do you keep them low and how do you transfer them to a new property? We're going to be talking about how to transfer them in disaster situations like wildfires and even in a regular fire as well too. So in today's episode, we're going to talk about the calculation. Let's say that you're 55 and older and you want to purchase a higher property. How do you calculate that? We're going to be talking about the forms, the time periods, how long do you have to transfer them over, who qualifies for these transfers, how many times can you do these transfers, and we'll also talk about eligible counties. This is going to be an all-inclusive episode on how to transfer property taxes in California. To help us with that, we have Carl Lindner with Assessment Counseling Services. Welcome back.
Hey, glad to be back. Thanks for having me.
So let's jump right in. So who can transfer property taxes in California? Like, let's say I pay really low property taxes. Under what circumstances could somebody transfer those to a new property? And does the property have to be lower price or can it be higher price now as well too?
As most people know, if they own a home or a property, your property taxes are locked in based on when you purchased it, and then it increases no more than 2% a year as long as you don't do any work to the house, to the property. So if you've owned a property for 20 years or so, you're paying on much less than what the current market value is. So as you get older, especially when you're planning for retirement, you're going to want to take advantage of this possibly. So if you're going to downsize your home, but even the market value of the new home is still significantly higher, obviously, than what your property tax basis is. What you can do is, if either you or your spouse, and it only has to be one of you, is 55 or older, you can move your property tax basis over to a new house. Now, this is all part of what was Proposition 19. It was passed in the November 2020 election, and it used to be called Prop 60 or 90 for within a county or without going to a different county. The rules are actually a lot easier now. So you can move your property tax basis to any county within the state of California if you are 55 or older. Let's say you sell your house for $1 million and then you buy a new house and it only costs you $900,000. As long as your market value of the old house and the new house are the same or the new house is a little less, you can move over your old property tax basis. Now, that's a huge savings for someone that's owned a property for decades, right? I think my dad's a great example. His house is probably worth, north of $1 million, and he's paying an assessment of like $300,000. So as you're planning as a senior, if you want to downsize or just go someplace a little more relaxed, you have that opportunity, right? So you can move your property tax basis, and you could do it 3 times after the age of 55. That's a lot. That's a lot of times. That's new as of the 2020 passing of Prop 19.
And before, there used to be eligible counties. Some counties were participating counties. Some counties were not participating counties. And then also, you couldn't do it at a higher purchase price. So what would happen, like let's say somebody was to sell a 2-story house and they wanted to move into a newer single story, but the newer single story costs more money. Before, you couldn't do that, to my understanding.
That's correct.
Can you do it now? And then how is that calculated if you can do that now as well too?
So I'll try to make it as simple as possible. You can now buy a property that's worth more in current market value than what you're selling your original house for. What you do is, let's say for instance, you sell your house for $1 million, but you're going to buy a new house for $1.2 million. You get to bring your old property tax basis over, but then the price difference, which is $200,000 higher on the new house, they just add that to your old property tax basis. So let's say your property tax basis is only $300,000 on this $1 million home. If you buy a $1.2 million home, then they're going to add the $200,000 onto your old assessment you're bringing over, but your property tax basis is still $500,000 instead of $1.2 million. it is still a fantastic savings.
100%. Yeah, and that's great because now it opens up the door to somebody looking to maybe even upsize a little bit as long as one person is over the age of 55. Now, this is something I did not know. I didn't know that if you were disabled, you could actually transfer your property tax bases, and I didn't know if you were part of a natural disaster that you could transfer them as well too. We had a natural disaster in Ventura County, the Thomas fire that wiped out a lot of the homes. I had conversations with lots of homeowners. I had no idea you can do this. I also didn't know if you're disabled. What does that process look like if you're under either one of those two scenarios? Is it the same thing where you can buy something bigger, or does it have to be something smaller in price? What does that look like?
So they did actually make this a lot simpler as well when they passed Prop 19. First of all, age doesn't matter for moving a property due to a severe disability, or if you have a property that was damaged at least 50% or more in a wildfire and any sort of government declared disaster. Maybe it was a flood or a mudslide or, God forbid, a tsunami if you're by the beach. Anything that is destroyed more than 50%, what you're going to do is you have the time window, right? So I forgot to tell you about the time window for the 55 plus. You have two brackets. You have a 2 year period between when you need to sell your original home and buy the replacement home. It doesn't have to go in that order. It could go either way. You'd still just have 2 years in between when you get your replacement home and sell your original home to move the property tax basis over. If you have a property that's been destroyed in a wildfire over 50%, and you want to just buy a new home, you don't want to rebuild it, you sell the damaged home and then you can buy a new replacement home. What the assessor will do locally is determine what the value of the home was that you're selling before it burned down, and then compare that to what you bought the new house for. And the same rules apply as the 55 plus. So if they're saying your old home was worth $1 million before it burned down, but you bought $1.2 million, they'll take your old tax basis over and add the $200,000 to your tax bill.
Now, when you say it could go either way, like let's say you're 55 and older. Let's say I sell my house. I've got 2 years essentially to purchase a new one, right? And then
Yes,
let's say that I purchase first. Does that mean I have to sell my property within 2 years, or does it not work in that direction?
it does work in that direction. You
Okay,
have to sell. You have to sell the original house within 2 years. So what happens is if you buy the replacement first and then sell the original home, you don't get the old property tax basis from your original home until you sell it.
got it.
So technically, if you're buying a new house first, you're going to pay based on the full market value that you paid for it. You're going to pay property taxes based on that value until the day you sell your old home within that 2 year window. And then the assessor will come and lower it back down to the property tax basis.
And then if the value of that home goes up in those 2 years, that means your basis will, or no, your basis won't go up because or it won't make a difference because your property taxes is based on whatever the assessor has it at versus whatever market value is at, basically.
Correct. So in an upward market, it is within 2 years is absolutely conceivable that you buy the replacement property at $1 million, but then your home maybe
Went
was
up
only
in
worth
value.
800,000. Maybe after a year and a half, it's up to $1 million, and now you're even. Now you don't have to pay a difference for a difference in the market values.
Got it.
So it can happen.
And if you purchase at a lower price, you basically simply get to transfer your property taxes. It's not like your property taxes go down. It basically remains the same if you do an equal transfer, basically, is what I'm hearing.
Correct. So if you sell your house for $1 million, you buy a replacement for 900,000, your property taxes are still 300,000. It's not There's no weird calculation or proration because you bought something less, right? It's an equal or lesser value proposition.
Got it.
And if it's over, then you pay the overage, and that's it.
Got it. So let's talk about the process. Obviously, we have 2 years. What forms are required? How complicated is this process? Who helps with this process? Can I do it as an individual? And how do I make sure that it gets done right? And what's the name of the form as well, too, that is required?
So all of these forms are referred to as BOE, which is Board of Equalization, which is with the state. BOE 19. There's a different one for each exclusion, and they all have which exclusion they are for. Sorry, what they're supposed to be filed for on the top, right? So you have the one for 55 plus. It's Very straightforward. It's a one page. It tells you how much did you sell your original house for and when did you sell it? When did you buy the new house? And proof that you're over 55. Usually you have to send a copy of your driver's license to the assessor to prove that you're over 55 when these transactions happened. You have to be over 55 on both parts of the transaction. You can't be 54 and selling your home and then buying a new one at 56, right? You have to be 55 or over for both parts of the transaction in that scenario. They get a little more complicated when it comes to moving your base value for disaster, because then you have to have the assessor come out and review, and they're going to have to review the value, because obviously it's not just a market transaction. You're going to be selling a damaged home. So they have to go back and look at the value of what it was before it was damaged. So that takes a little bit more time, and you kind of have to prove that over 50% of it was damaged. Usually it's important to have photos and contractor workups just in case. And for the disabled claim, whether it's disabled veteran or just severely disabled, let's say you're moving from a 2-story house to a 1-story house because God forbid something happened to you, you got in an accident, you can't walk up the stairs anymore. You have to file a form that also includes a doctor's note that explains why you're severely disabled. That one's a little different too, because also you can do a claim for disability, but you're actually essentially you can stay in place, but you're also trying to avoid being reassessed for adding certain projects. If you're going to redo your current house, maybe you're in a wheelchair, you got to lower all your cabinets, you have to redo your bathrooms so that they're wheelchair accessible. That is not supposed to be reassessable, but you kind of have to prove it.
Is this only for primary residences? Can it be done for investment properties? Are there any restrictions on types of properties like condos, single families, PUDs, mobile homes as well too?
It is good for anywhere you live. If you live and own a duplex, would you rent out a portion of it? Then you get a little more complicated, right? Because then you're going to be having to do a factored, what they call a factored base value, where they divide the total value of the property into units and then apply these reduced property taxes over from unit to unit. So it gets a little complicated at that point. But anywhere you live and claim as your primary residence is eligible for this as long as you own it.
And it's not for investment properties, basically, in other words, meaning you can't have multiple transfers, basically.
Correct. For investment properties and for people that want to kind of stay in place, especially during a disaster, that's actually a good segue. We could talk about what a different claim. It's just called misfortune and calamity. It's an MNC claim, and it happened a lot during the fires. Like you said, the Thomas Fire. We did a lot of those for our clients, as well as the Woolsey Fire over here. It was a big deal. So what we were doing is you have to show the assessor the damage within 1 year for this claim of misfortune and calamity. And what that is, that's a temporary reduction of your improvement value, which is your building value on your property taxes, no matter what your basis is. So let's say 25% of your house burned down. They're going to take your improvement value on your home and reduce it by 25% if you can prove it until you rebuild it. That's for all properties. That's not for a property that you have to live in. It's for a property that you're going to keep holding on to and rebuild.
What about fees? Does this cost a lot of money to do this?
Our firm helps people with this because, a lot of people are uncomfortable dealing with a large government bureaucracy or filing the right forms or waiting to see a year after you filed something that it's been done properly or on time. We charge a pretty nominal small retainer to help out with things like this. Depending on your comfort level, there's a lot of things you could do yourself. It all depends on what your comfort is. There's no fee at the county to file for any of these.
What are some of the things that you see that typically go wrong in these types of transfers? Maybe like people missing the deadline, maybe people not filling out certain documents correctly. What do you typically see that would be helpful to people maybe in these transfers?
It's definitely people making errors on the submission forms. On the backs of these forms, or usually on page 2 on a downloadable PDF, in very fine print, they tell you exactly what you need to submit with your claims. And for us, the toughest one is the disabled veteran or severely disabled claims, because that is something we can't really help with because we're not your doctor, right? We're property tax specialists. And it's kind of ridiculous that the government has to determine whether or not you're disabled or not. But you still need to have a doctor's note that explains what your situation is and what kind of accommodations you might need, whether you're staying in your own home and remodeling it to be more accessible, or if it's moving homes so that you have a more accessible home once you're disabled.
So basically, a lot of the times when you see when it gets rejected is they didn't submit almost like a complete file. And then how long does it take? And then if you like don't complete a complete file, could you miss your deadline even though you submitted on time and then they reject it? Can that cause you to miss your deadline of the 2 year mark basically? Or or can you file after the 2 year mark as long as the sale and purchase are done within that 2 year window?
Yeah, so that's where they kind of get you a little bit tricky, right? Because you do have this 2 year window between buying a new one and selling the old one, but you technically have 3 years from when you sell to file all this paperwork. But we never advise that because, life happens. You would never remember, oh, yeah, in 3 years from now, I got to file this one page of paperwork. It's like, just send it in. In fact, realistically, if you hired a service like us, we would go through and just make sure everything was in order and then submit it on your behalf. But if you just want to go it alone, you have to submit it to the best of your ability. Make sure you get a certified mail receipt that shows that you filed it timely. And then most of the time, the assessor won't give you a hard time if you've submitted a form and you're missing something. But it does take a while. It takes almost a year for them to process these things.
And that means that it would take a year for your taxes to go down to where they need to be, basically, until that goes through successfully. And how do you find out if it went through successfully? Like, if it gets rejected or accepted, do you receive notification either way, or do you only receive notification if it doesn't go through?
You receive notification either way. Most counties are pretty good about that. Los Angeles County sometimes misses notification, but you can always call and check. The problem is they don't answer the phone. Realistically, they're supposed to send you a notification either way. That's normally what we see.
And then I know that you guys said that you guys handled these services for clients if they want it.
Yeah.
Personally, I've had several clients that are like, look, Jose, I know I can do it on my own. I don't want to do it on my own. I want to make sure that it gets done right. If somebody is in that same boat and they're considering something like that, not an exact number if you don't want, and obviously it's at the time of this video is subject to change. Can you give us a range of approximately what somebody could expect to pay for something like that?
At this time of this recording, I'd say our basic fee would be $2,500 retainer.
That's a deal.
And then we know exactly what needs to be checked off, right? So we're working you through the whole process. We're doing all the paperwork for you. All you have to do is sign it, and we send it in with all the documentation we need. And as long as the assessor doesn't do something like miss something or not read through the whole submission and deny the claim or make some mistake, then you're really in a good shape. It could probably be done for that amount of money. It might go over a little bit if there's some problems with the assessor, but that doesn't happen too often in these situations.
What happens if somebody gets denied by mistake? Do you guys help with those appeals? And what do the appeals look like? Like, meaning what type of forms are needed to submit? How long does it take? And what does that process look like, basically?
So we have actually, I did one of these at the end of last year.
Mm-hmm.
What happened was a client built their property. The rule with the 55 plus base year value transfer is that if you have a piece of land, you have to finish construction on the new property within that 2 year window as well. And as we all know, that's really difficult these days. That's really difficult. I was at the point where the assessor estimated the wrong completion date, and they're like, oh, it's outside the 2 year window. It's done. You can't do this. I had to go to the city to go prove that there was a temporary certificate of occupancy to prove that it was essentially livable within the 2 year window. It's doable. We absolutely help out with situations like that. What we'd want to do is to protect your rights, we'd file what's called an assessment appeal, which it's usually a nominal fee. In Ventura County, it's still free. In Los Angeles County, it's $46. And we'd file an assessment appeal on your behalf as long as we see the information that you've given us is solid. And we essentially say, look, you need to go reprocess this. Look at the evidence we have. It was filed timely. It was within the rules. And usually that makes them take a second look.
Any upcoming changes that you see in terms of property taxes in California, transferring the property taxes?
There's no current, from what I'm aware of, there's no current ballot measures. Like there was a big measure in 2020 to try to make it so that there was no base year protection for commercial and industrial buildings, but that didn't pass. One of the best things about, actually one of the only good things about taxation in California is that you buy a property, you're locked in at your purchase price, with a maximum increase of 2% a year, like I mentioned earlier. They're going to try to keep taking that away. Every couple of elections is probably going to pop up, and they'll start with just, businesses or residential income properties. But as of right now, we don't see it. They're trying to fight more on rent control type issues as ballot measures this year, but they're always trying, so it could come up pretty quickly again.
So basically, one of the best things in California is that it could only go up by 2% inflation, which means that if you bought a property 30 years ago, very likely you have a lot lower property taxes than if someone bought a property today, which is good for seniors because as you age, it allows seniors to remain in properties. And also for even like investors as well too, you get to keep your property taxes very low, so it's actually a good thing. So anything else, Cole, that you think would be helpful for somebody considering transferring their property taxes in California?
I would just say, be aware of what your numbers are, right? You got to know what your current assessment is. You got to know what you're looking at, know what your current market value is, and be aware of what you're trying to look for, whether it is an upsizing or if it's a downsizing, or just moving to, maybe you're going to move up north to a rural farm or something. And that's fine as long as you live there. You can use this Prop 19 as well. It gives you a lot of flexibility for 55 plus. And if you don't want to rebuild your house after a disaster, it gives you flexibility.
Flexibility. Got it. So essentially, in other words, quick summary: eligible in any county. You can do it up or down. If you do it down, it obviously remains the same. If you go up, there's an additional calculation. This is a process essentially that you guys can help them if they wanted to. So, Carl, if somebody wanted to get in touch with your company, how can they do that?
Once again, I work for Assessment Counseling Services. You can give us a call at 805-374-9500. My direct extension is 224. My website is at www.acstax.com, and you can contact us there if you have an inquiry, and we'd be happy to help you out.
Carl, I want to say thank you for taking the time to be on the show. Today's episode, we had Carl Lindner, Assessment Counseling Services. How do I transfer my property taxes in California? If you have enjoyed this episode, make sure to hit that subscribe button. If you feel that this episode would be helpful, make sure to share it with a friend. Thank you guys again so much for being watching the show. And Carl, until next time.